Hello, everybody. My name is Phil Blancato, and I'm CEO and President of Latimer Thalman Asset Management, Chief Market Strategist for Jose. Welcome to another weekly Market Impact. We are already October 13th. Are you ready for this? Hold on. Are you ready? 1 month from 2 days ago, the Rockefeller Christmas tree will be set up in Rockefeller Center. Oh, my gosh. They started skating in Rockefeller Center over the weekend. I know that because I work here. I could turn my camera on. St. Patrick's is right over there, and the tree's going to be right over there. It's here. It also means we're getting closer to the shortest day of the year, which is a cool thing. I'm a big fan of that. We had this big weather weekend here. Oh my God, so much noise about this gigantic nor'easter. It was barely a rainstorm. It was so ridiculous, the nonsense that was made about this storm. It's amazing to me how they do anything to get you to watch TV, anything to get you to watch TV so they could sell advertisements while you watch in sheer panic of a rainstorm. Oh my gosh. I also, by the way, when I was a kid, no storms were ever named unless it was like a hurricane. Now, have you noticed how everything is named? Everything's got a name. A snowstorm has a name. It's crazy how we've amplified our lives with this. I'm holding up a phone for those of you just listening. It's just amazing how we just need constant flow of information. And then we're listening to a podcast, which is kind of hypocritical, I guess. Sorry. Forgive me for my rant to start today's call up, but I'm looking out my window and it's barely raining. Anyway, well, we're going to start where we always start. I have so many random topics today. Today will maybe be the worst podcast you've ever gotten from me or the best, depending on what you like from me. Because there's not a lot of economic data. The government shut down. So there's a lot of data we're just not getting. We will have a big week of earnings. This is a big week for bank earnings. The companies like JP Morgan, places like that, they'll start to report this week. So next week, we'll have more data to talk about. And we got some interesting data on consumer confidence. I'll get into some of that in a little bit. But let's just get into the random stuff because that's more fun. First, we have Friday. The market sells off 2.5% on Friday because of new China woes. Now, I've talked a lot about rare materials on here, and that lithium to me is up there with things like aluminum and copper, things that we have to have, medicines in the United States. And this is all about China putting a squeeze play on the U.S. to try and force them to the bargaining table, because the reality is we still haven't gotten through what the sort of this Chinese negotiation as to what we're going to end up with from a tariff standpoint. And China's pushing back very, very aggressively. I did see a report on 60 Minutes. I usually don't watch 60 Minutes. I don't like watching shows that I feel have a bias to them. And in fact, I watched Andrew Ross Sorkin after the opening headline, who's clearly biased about politics and finance, which I don't like. I think finance people should be apolitical. It's just my personal opinion. I am apolitical. I don't care left or right. So I don't watch Andrew Ross Sorkin. I don't believe that when he said the economy's terrible, when he couldn't be more incorrect on that. Factually, the U.S. economy is quite strong. Factually, the labor market's lower than it's been most of our lifetime, down at 4.2%. Factually, we grew at over 3% in the second quarter. I'm probably going to go over 3% in the third quarter. Factually, inflation's at 3%, not that bad. Inflation, relatively moderate, but wages above the rate of inflation. So the facts don't add up to the 60-minute skit on Andrew. But more importantly, another headline. I'm all over the place today already. More importantly, the piece before that, Chinese hacking. China is now hacking every single company it can in the United States, and that multiple companies in the U.S., including small water companies, are being hacked. I went on to say that the president let go of a general that was in charge of this and very in tune to it, for different sets of political reasons. So then the conversation clearly turned political again, sadly. I wish I wouldn't do that. Why can't we just keep stuff to the facts? Let us make our own conclusion, but that's not what happened. My point is, whether it's rare earth minerals, hacking our computer systems, or limiting how we get copper, aluminum, platinum, gold, whatever, all the things we need for manufacturing, China's in a battle with us. And clearly, when you look at what's happening in the lithium trade, with stocks today, I'm not suggesting you buy, but MP Materials up 23%, it's up 96. I actually recommended this company on Fox Business a few months ago when it was at 23. So for those who might have bought it, I hope you made some money. My point is, you watch what's happening in the lithium market. It's really quite incredible how the United States is doing all it can to fight China back. So Friday represented this sell-off because of the president getting frustrated that China is using lithium as a weapon and then raising tariffs to 100%. Now, over the weekend, so there's some calming down, and today the market's got not all of it back, but a good 1.3% as of now, up on the Dow, 2% on the Nasdaq, and 1.4 on the S&P. Still down about 1% from the all-time highs that we were at. So these headlines are still having an impact on markets, and that's the start of today's call. Don't let the headlines distract you from good companies. JP Morgan made an announcement today, which I thought was fascinating. JP Morgan came out and said something that I think was really quite impressive. So when you think about what JP Morgan wants to do now, they're considering investing basically billions of dollars into American-based companies, and these companies are critical infrastructure companies. Why that's so important? It's in the areas of things like lithium manufacturers and defense manufacturers and energy manufacturers. So banks often take shares in companies. It's how banks make money beyond their regular opportunities. And when I see something like this, it tells me that there's a lot more than meets the eye what's happening in the American political system. Now, you may not like Donald Trump, and I'm not suggesting you need to, but you certainly have to look at what's happening with, say, a JP Morgan and investing this kind of exceptional amount of money. And it does make you pause for a second and ask yourself why. Now, is it an investment opportunity? Is it the president forcing the issue? It's hard to literally put your finger on exactly what it is. I think it represents an opportunity. For example, aluminum. We're starting to build some aluminum smelters back in the United States. And I think that's pretty cool because we haven't had any aluminum in a long time. And at a time when we need to have some protection in case, let's say, let's just call it what it is. Let's say China really does want to go to some version of a war, cyber war, real war with the United States or Russia for that matter. Having some of the things we need to survive, I think are pretty important, whether it's rare materials or aluminum or everything in between. So watching JP Morgan launch what they call its U.S. interest in national security and core interest in that. And basically, it means it's $10 billion across several categories: defense, aerospace, energy, and on from there. Now, again, I'm not recommending JP Morgan as a buy, but some of these headlines are fascinating and they're affecting the market. JP Morgan stock today up 2.4%, beating the market. So these kind of exciting things are having an impact, exciting one way or the other, I guess, having an impact on markets. But the core of the market is still doing quite well in spite of some of these odd headlines. So when you think about stocks near an all-time high, the bond market being very active and doing quite well, there's one. It goes back to this experiment I've talked to you a lot about. We're either on the cusp of a really growing U.S. economy with the emphasis on U.S. manufacturing and the U.S. consumer, lower inflation, lower interest rates push U.S. economy higher, or we're on the cusp of this AI boom is going to amount to nothing. There was an interesting piece today about what's happening in AI. And is AI being developed just to develop it, or is it being developed to fit the needs of businesses? And it's a little bit like the internet. When the internet was just came out and it was useless in the beginning, it took many, many years, really 2 decades, for us to really maximize the internet. Where today, in 2025, it's a part of our every minute of every day of our life. But in 2000, when it really rolled out, it didn't really have an impact on us for years, call it 10 years before it really mattered. Is AI in the same camp? So, in other words, is there this AI bubble out there that the economy isn't as strong and it all being propped up by spending on AI and everything else in the economy is terribly weak? Well, factually, right now, that doesn't seem to be the case because tariffs, as of right now, don't seem to be having this profound impact that was originally thought. If you remember, I never thought it did. I never thought tariffs would because to me, they're not inflationary. They're a one-time price hike on a particular set of goods. And when you look at what the latest information that's come out about tariffs, for example, at a time we're not getting a lot of data, unfortunately, with the U.S. government being shut down, and I still think the U.S. government probably reopens here 2 nights from now, maybe tomorrow night, because that's when the first set of paychecks don't get paid to the average government worker, and maybe they'll go 1 week, so it might push out 2 weeks. But I'm still holding out that we might get some movement here by today or actually sometime tomorrow. But the NABE, which is called it's a private sector business group, looks at the U.S. economy and gives us an overall expectation for how the U.S. economy is doing. Kind of interesting. Came out and said initially they thought tariffs were going to have a profound impact. And seeing tariffs as of right now having less of an inflationary impact. And in fairness, we don't know what's happening with China. If we ended up with 100% tariff on Chinese goods, well, then this narrative would probably be wrong. But they actually increased U.S. growth for overall annual growth from 1.3% to 1.8% for 2025. Now, remember, I talked about Q3 being a 3.8% U.S. growth, and then Q2 being 3.8, Q3 being probably 3.5. But don't forget, the first quarter was negative. So that's how you get to this overall growth for the year of somewhere between 1.8% or higher. Actually, it's going to come in higher. I think it's going to come in closer to 2.5% because I think the third quarter and ultimately the fourth quarter are both going to show to have growth rates in excess of 3%. A lot of that is AI spending, but the consumer so far keeps hanging in there. We saw auto loan debt, or auto loan payments, late payments on auto loans now push out past 60 days. So 6% of current auto loans are in default for later than 60 days, which is about 1% higher than normal. Okay. Minor cracks here and there. But when I see the NABE, that's not a number I talk to you a lot about. National Association of Business Economists. It's kind of a random assortment of data that we don't normally look at, but since we're not getting good federal data, it's an alternative source of data. Tell me that things aren't as bad, and that's a nationwide organization. I don't think things are as bad. So I'm a bit all over the place today. Forgive me. Like I said, this might be the most hated one I've ever done for you, or the most loved one I've ever done for you. I'm going to talk about a lot of random topics, but I had to start with where this massive market correction was much more about headlines than reality, much more about fiction than facts. And I think it's important we keep it to the facts. And the facts right now still say things are fine. Earnings season's about to launch, and we do need strong earnings growth to justify stock market prices. So, for example, for the week, the stock market was down. We're now up 12.54 on the S&P 500. We're down 2.41 last week, and that's all because of Friday. The Dow up 8%. Russell 2000 got clobbered on Friday, down for the week, down 3.2%. That's small cap stocks. Up basically now only 8.5 on the year. When you look at EFA, that had a tough week. International stocks down nearly 2% on the week, still up 25 on the year. So everybody took a wallop on Friday. What didn't take a wallop? Fixed income. The bond market for the week was up 0.33 and now up 6.75 on the year. So really quite impressive. Remember, bonds have done quite well. What does this mean? A balanced portfolio worked on Friday. Bonds held you up and acted as safety while your stocks sold off. So when you look at the overall health of the market, it's quite good. When you look at earnings growth, which is what we have to have here, we get 8% earnings growth in this third quarter. The stock market's not inexpensive. But the PE ratio, which is a basic measurement of how expensive the stock market is, the price of current companies. So if you look at NVIDIA divided by how much NVIDIA makes, price divided by earnings, the stock market's a bit expensive, trading at 22 times earnings. It normally trades at 16 to 18. So in other words, we need earnings growth to justify this market. And we especially need earnings growth in the companies that matter the most, which is the Mag 7. And so far, that seems to be the case. I guess my grand total is when I look at the market sell-off, it probably represented an opportunity, unless in fact we get to this gigantic scenario of China and the United States getting into a real fight over tariffs that prolongs to 100% tariffs at some point, if not more. But when I see things like JP Morgan making an investment, when I watch the federal government put money into small lithium type companies that could have an impact down the road, it'll take some time. When I see us making an effort to secure our national security effort, those are investment opportunities for me. So I personally want to kick myself for not buying some of the lithium stocks. I really did think they were an interesting idea. And I have to be careful when I can buy versus when you all buy. I didn't buy them, so now I feel like a total jerk. But some of these names are up through the roof. But I think it's not about the names. I'm not suggesting that. It's about American investments switching to where we need it most and where the most opportunity is. Some of that's happening. So my point is, if you're diversified in your portfolio and you own other things besides the Mag 7 plus other stuff, that's still the best place to be. All right, so big opening salvo. I got a bunch of headlines I want to hit on with you that I think are fascinating. I'm going to start off with the Georgia Bulldogs. Yes, everybody, it's a very controversial game, but as my friend Michael Bryan says, a dear friend of mine, a big Bulldog fan, when we lost to Alabama and we, got unlucky with a drop ball going into the end zone and a bad play at the end of the game, we got outplayed, we got outcoached, and we got out hustled for the game. It's a 4-quarter game. In that game, when Georgia got a call on the goal line, which, I've looked at it a few different ways. It looks like the guy never had control of the ball going into the end zone. It got punched out before he crossed the line, but it's close. It's a very close call. Well, there's still another half of football to go, and Auburn didn't show up. So you got to play 4 quarters, and if you don't, one call doesn't make or break a game. So Georgia won. My Penn State Nittany Lions, I care deeply for Penn State. My team growing up before the girls went to the University of Georgia. So it's Georgia Bulldogs 1, Penn State 2. Fired their head coach, James Franklin. And I know most people didn't like him, but he was a very successful coach. He just couldn't win the big one. And in life, eventually you got to win the big one. And he didn't do it. And losing to some teams that are far superior, not nearly as strong as Penn State this year, sealed his fate. And he gets to leave with something in excess of $50 million. Goes to show how goofy the sports world is. He had a guaranteed contract, I believe, of $54 million. Now, maybe they'll negotiate a one-time settlement or pay him over years, but my gosh, sports world can be really upside down sometimes. I just can't believe that. And of course, my beloved New York Yankees were eliminated. That's okay. The Toronto Blue Jays hit like no other team I've seen in a long time. And they were kind of trolling the Yankees after the series, like goofing around about New York playing the song. Well, guess what? They just lost 1-0, 3-1 in the first game against Seattle. Now I hope they get eliminated because karma is not a fun thing. Be careful what you wish for. Karma can be pretty nasty. So Yankees out, Bulldogs won, Penn State a mess. That's it for sports. I know you all get sick of my sports. The girls are doing okay. Marcella had a really rough physics exam. Oh boy, Marcella's not the kind of kid that likes to do badly on an exam. And she is quite upset. Oh boy, I got to get down there and I'll be down there this weekend, calm her down because she's an unhappy kid right now. She does not like to get bad grades, and she did not get a good grade. So she's a little PO'd right now, putting it mildly. And Luca being Luca, Luca's got a cold. She's fine. And Stella, our little dog, by the way, who was very sick, is now brilliant. So all good in the family life. All right. So other headlines I want to hit on, which I think are just fun things to talk about. So not much more on the economics. A couple things I want to hit on before I wrap up. First off, really cool research piece I read about flying airplanes that have no pilot. There's a really cool company out there in Mountain View, California. It's called they are a company that they're called Reliable Robotics, and that they are going to have they already have them, self-flying planes. In other words, we're not really ready for self-driving cars yet. Soon, self-flying planes. And what's interesting about it, they think it'll change aviation. And you'll just go to an airport and get a little mini plane, jump on it, and it'll fly you wherever you want. I mean, how many of you are ready for that? I'm not sure I'm ready for a self-driving car, but a self-flying plane. I mean, it's kind of cool. My father had this country house up in Pennsylvania, and it's a long ride. It's a 3-hour ride. I always thought that maybe before I'm no longer on this heavenly earth of ours, maybe just maybe I'd be able to fly there and cut my 3.5-hour drive time down to like an hour or something. I don't know. Sounds kind of cool. I mean, that might be interesting. I think that would be a lot of fun. Anyway, self-flying planes, I thought was a headline I had to mention to you all. I can expand on it if you want, and want another piece of that one. The next one I thought was a really cool piece I read about how Ferraris, I'm Italian, of course, are going to have an all electric Ferrari. It doesn't roar like the current Ferrari does, but it's going to be cheaper and easier to drive. Well, that's kind of cool. Why? Because who would want to drive a Ferrari? By the way, electric Ferraris are really fast. So I think that's another pretty cool headline. I mean, I'm not really the kind of guy that would go and spend $500,000 on a car. I don't have $500,000 to spend on a car. But I mean, there's something to said about driving an electric Ferrari. I think it would just be cool because if you've ever been in a Tesla, they're fast. They're really fast. They're the fastest production car in the world. They're so fast they rival some of these really supercars that are out there because there's nothing to them but a turbine and a battery. So they're really light. Next headline I saw, or next piece I read that I thought was fascinating. In Belgium, there is a nuclear power plant that is being shut down. And the they've already shut off the reactor and they're slowly shutting it down. It's a 50-year-old plant. Well, there's a huge uproar about it. So much so that someone took a projection camera and projected on the side of the tower of the plant, "Don't Stop Me Now," which is a video of Freddie Prinze from Queen holding up his hand of his great song, "Don't Stop Me Now." And why I mentioned this headline is that as nuclear power plants shut down around the world, because we haven't built any new ones in 30 years in most countries, especially in the United States, they're just out of their useful life. And to fix an old one and rebuild it's a lot of money. Remember the great story about how Microsoft is restarting 3 Mile Island, and it's going to take $3 billion just to restart it. And the reason why I need power for data centers. The oddity about this is the people who don't want to shut down are the activists of when I was a kid, Greenpeace and other climate change folks who hated nuclear power plants. Why? Because they were dangerous if you had a nuclear explosion. Well, there's never really been one other than Chernobyl, and that one wasn't built right. It didn't have the cement dome to protect it. Even the Japanese Fujiyama reactor in Japan also worked out pretty well so far. I haven't had any major releases of radiation. So as a kid, I can remember all this angst about nuclear power. There used to be one in Long Island, so much anger about it. And think of how the switch, we went from hating them, now loving them. Why? Because, well, call it what it is. They're much cleaner than gas, and they're much cleaner than oil, and they're much cleaner than coal. So what once was this terrible thing about nuclear power has now become something that activists want. Well, could you imagine if I'm 58, so this I remember this as a kid, call it 50 years ago. We didn't have this anger against nuclear power, and what if 30, 40, 50% of the American power grid was nuclear, and we wouldn't have nearly as much hydrocarbons in the world and wouldn't be worried about where we're going to get power for data centers. As data centers today take up 4% of the American electrical grid, soon will take up 12. How New Jersey energy prices where I live are up 12 to 25% depending on where you live. It's just so goofy how we get so overreactive, and now here we are coming right back around to it once again. I mean, you can't make this stuff up. It's kind of it's just nutty. The other fun headline I saw, which I can't help but notice, boy, are you ready for this? There's a lot of talk about how there is just not enough rain in the United States. Well, guess what? The last couple of years it's rained. Throughout the Midwest, we're having a bumper crop in soybean, a bumper crop in corn, and a bumper crop in wine, vineyards. One area of the country is still pretty dry. It's Texas. Outside of Texas, who is doing all it can to find water. But Texas aside, the rest of the country is wet or less dry. So places like California have more wine than they ever had before. And are you ready for this? Americans are drinking less wine. When it came out recently that a glass of wine a day is not good for you and can cause cancer, wine wine usage post-pandemic and in general is down. So what's happening in California? They have more grapes than they know what to do with. They're actually tearing out old grapevines and replacing them with new vines that may be more interesting to people. I mean, I would never in my life have heard that California can't sell its wine. Part of it is tariffs. That Canada's not buying as much as American red wine. They're buying other wines. So there you go. There's an impact on tariffs there. The Canadians coming back at us. I think that's going to get resolved, by the way. Seems like Mark Carney has finally woken up, the premier of Canada, realizing without the United States, the Canadian economy will fall apart. So now he's come to Washington with hat in hand. So I think we're going to get to a resolution there pretty soon. But can you imagine, as a country, we're drinking less wine? Who would have thought that would happen? I mean, that seems quite impossible in this day and age that we may drink less wine as a country. I mean, I can't believe that that's even a thing. How's that happen? Who would have thought? I just think that's pretty wild. I did see some headlines on some data that were interesting to me. That I did want to remember Doge and all the noise about Doge. It was a great update on Doge. So right now, tariffs are going to bring in around $300 billion a year. So that's exciting that we're starting to see. Well, I guess the way you look at it, the average person is going to pay a bit more to live. So we're looking at tariffs costing the average person about maybe $600 a year. Gasoline's down again. Oil's below 60 at $58 a barrel. You're going to start to pay less than $3 a gallon for gasoline. That has a pretty profound impact on where we're at from a stuff we spend every day. But just some things I thought I'd highlight that you didn't get a lot of spending cuts from Doge. Right now, the biggest problem with the federal government right now, just to be clear, Social Security is our biggest number one outlay at $1.57 trillion a year. Medicare, 987 billion, Medicaid, 669 billion. Then you look at just the interest payments on our debt at 1.3 trillion. The problem is Social Security costs just keep going higher. When you look at other areas, defense spends about 800 billion, and then other spending, which would be like veterans benefits and necessary things to keep the country running, are about 800 billion. And our deficit today is just too large. I mean, you're looking at the United States deficit being about 6% of gross domestic product. And then kind of goofy that you have a $1.8 trillion deficit above the annual budget deficit. So you have the total deficit, and you got what we spend per year and how much we overspend. We're still spending about 1.8 trillion. So those didn't fix a heck of a lot. It really comes down to Social Security, everybody. Even with $300-400 billion in tariff revenue, if you don't have the guts to fix Social Security, we're not getting out of this deficit hole anytime soon. The guts meaning that you have to have the ability to go out of your way to change the rules around Social Security. And all you got to do is take the age in which you collected from 62 to 65. And I'm not suggesting for people who are at 62 today, but if you started with people who are 18 and slowly move the needle up, push them to 65 or even 68, with a short amount of time by age adjusting it, because people are living a lot longer. Back to my glass of wine, by the way. In Sardinia, which has the oldest population on the planet, you know what their average daily meal is? A glass of wine, cheese, fresh vegetables, and fish, and meats. A very diversified diet of very fresh things, which includes a glass of wine. So, I mean, there's a lot of benefits in wine called flavonoids that are good for your blood and your heart. Now, you can't have five, but I don't think one is a bad idea. I know from my own family members who live well into their 80s, who have wine every day. Anyway, I'm way off target here. My point is, if we don't age adjust Social Security because we're all living longer, then Social Security will become this gigantic sinkhole of money that we never get out of. And that's a simple thing to fix. And maybe in the president's last 2 years after the midterm election, hopefully he'll take that on. And I'm not picking sides with the president one way or another, but there's some obvious things we'd love to see fixed, and I think that is one of them. The other headline I have to hit on, just because it's not anything related to economics and probably not worth your time. Thank God it seems like we've come to a resolution, at least temporarily, between Israel and Hamas. And those poor Palestinian people can go back home to their pile of rubble. Oh my gosh, it's terrible. But certainly the hostages being released, and the folks have passed, and those who haven't passed. Maybe just maybe, after being in wars for thousands of years, at least our lifetime, we're all aware of it. Maybe this is the beginning of something new. Maybe there really will be a Palestinian government. Maybe Hamas will be out of the fray. I find it hard to believe, but let's hope that maybe there is something to be said there that's worthwhile. All right. One other data point, because I'm trying to mix in some data with some fun stuff, that just headlines. We did get Michigan consumer sentiment. And I care about the consumer. What the consumer thinks is important. Now, sometimes people tend to talk about sentiment in the same way they talk about their personal politics, which I don't love. So if you don't like the president, you say sentiment is bad. If you love the president, you say sentiment is good. That's not great. But right now, the Michigan Consumer Sentiment Survey, which is one we play close to, was basically flat. Stuck in there at 54.2, so the consumer is hanging in there. Importantly, current conditions, the sub-index, which shows how consumers are doing right now, improved to 61. So I was happy to see that there was an improvement in consumer sentiment as far as what they think of right now. It sounds like the Federal Reserve is going to cut interest rates at the next October meeting from the latest round of Fed speak. Seems like there's a good chance of that. I still think the current Fed funds rate is a little too high versus where inflation's at. Fed funds rate's at 4, inflation's at 3. Fed funds rate should be probably 3.5. We probably deserve 2 more cuts to get us a little bit more closer to where we should be. And then total amount of credit consumers owed rose by 363 million in August, after being revised up to 18 billion in July. That's the slowest pace in the last 6 months. So you're not seeing a lot of debt be added on new. It means consumers are borrowing at a slower pace. By the way, it's not great for the US economy, but it's good that consumers are not willing to load themselves up on debt and take chances. All right. So a lot of data, a lot of different points today. Try to keep it fun and interesting, like you know me, I always like to do. Last two things of the week, and then I'll let you go on to your merry way. First off, shout out to Diane Keaton. I'm not a huge. I love the Godfather movies because I think the story and the acting is incredible. I hate what it says about Sicilians. My father was a proud Sicilian, and to see it portrayed like we kill our brothers and murder our friends is I don't love that. But having said that, those movies were powerful and worth watching. And my father's hometown was actually in the movie The Godfather, Molto Camacho. You know, the movies, the wedding scene, a lot of it was filmed where my dad is from. But hats off to Diane Keaton, who was Michael Corleone's wife in the series. But on to her Annie Hall fame, just a beautiful woman, such cool style, amazing actress. I enjoyed her movies. I thought she was a great actress. So God bless her. May God rest her soul, and may she have know how what a profound impact she had on people my age, 58, so on. I thought she was an amazing actress, and I enjoyed her movies very much. So she'll be my first shout out of the week. My second shout out of the week is to Maria Corina Machado, and she got the Nobel Peace Prize. How do you not have a Nobel Peace Prize winner of someone who, as the phrase goes, she continued to light the flame of democracy keep the flame of democracy burning amongst growing darkness. She's from Venezuela. And if you don't know Venezuela, there was a really powerful report written by the Wall Street Journal, not but a few months back, how most women there young women are dragged into gangs, can be raped or treated like third-class citizens, lower than not second class, as basically as if they're dirt. Women have very little opportunity there. It's a terrible gang-ridden culture and a suppressive government. How Maduro stays in power and how they haven't overthrown him, I do not know. And for this woman to continue to try and light the flame of democracy in her tagline, which is great, ballots over bullets. What a great tagline, ballots over bullets. So my shout out of the week goes out to Miss Machado. I mean, she must be one incredible person winning the Nobel Peace Prize. And I can't be remiss to say, you know, it's just at a time when there was some strife in the world, the war between Russia and Ukraine, obviously what's happening in Venezuela, obviously Israel, Hamas, maybe it's finally realized. It's nice to see a bright light in the world. And for those of you who hate Trump, by the way, you got to give the man some props on this, that he had to be very involved in this, resolving the Israel Hamas war. So I'm not getting into whether he deserves a Nobel Peace Prize or not. That's just goofy. But I will begin to tell you, I don't know how you even figure out who deserves it and who doesn't. But the same token, having that war come to an end is powerful. It means people will stop starving and maybe stop being killed. So that's a hats off to the president as well for his role in that. And it certainly was a lot of different factions got involved from what I read over the weekend, that the local people, the Palestinians finally rose up, the local governments and pressure by the president brought Hamas to the table. So good for everybody who was involved. But today, shout out goes to Miss Machado winning the Nobel Peace Prize. And with that, I will be in Athens, Georgia this weekend, cheering on those Georgia Bulldogs. It's going to be a great game against Ole Miss. But more importantly, forgive me for this week's podcast. I hope you enjoyed it. It was a little different. I just figured, break up the same old, same old. Why not mix it up a little bit this week and have something more fun and different and talk about, because there were so many headlines, from wine to Nobel Peace Prize to Social Security and everything in between. Today was your entertainment podcast. I hope you liked it. If you didn't, let me know. If you didn't enjoy this, but if you did, let me know that too. Have a great weekend. I'll talk to you soon. Bye-bye.